What's going on, everyone? Happy Sunday. Hope we're all doing well. Let me get an audio check here real quick. All right, should be good to go, guys. Hope you guys are doing well. You guys should be able to see the dollar weekly chart. So with that, guys, we're going to go ahead and get into what I'm looking for here for the week. 1 second, just want to pull up the economic calendar, see what we're working with here this week. All right, so we got a fairly decent economic calendar here. Let me make sure you guys can see that. All right, should be good to go. All right, guys, welcome in. How we all doing? Happy Sunday to you guys. Justice, hello, hello. Joe, happy Sunday to you, man. Glad to have you. Ali, been a while. Glad to have you, Ali. Silver Bullet Trader, hello, hello. Jeff, happy Sunday to you, my man. Hello, hello, Ali. All right, guys. So with that, guys, let's go ahead and get into the agenda here for today. Happy Sunday, Cleo. Abraham, happy Sunday to you, my man. Glad to see you crushing it. All right, guys, so the game plan for today, same as usual. We're going to run through the markets that I'm looking at, dollar, bonds, and index futures. If you guys have any questions, markets you guys want me to take a look at, would be more than happy to do so when we get into the Q&A portion. Also going to share some details with you guys as to consolidation market profiles, which is what you guys will probably realize we've been in for the past about week to 10 days. And I want to show you guys how I still go in there and find setups even in a difficult consolidation market. And I'm going to share some of those insights with you guys as to how I'm still able to frame price runs, get in, get out, and get paid, things that I'm doing live just about every single day of the week. Other than that, like I said, take a look at a few markets, share my game plan, what I'm looking at macro perspective, and share with you guys what opportunities I'm looking at going into this week. So economic calendar, this is my first time taking a look at it. So Monday, Tuesday. Awesome. So quite a few trading days next week. Definitely be there Monday morning. Tuesday, very interesting. Consumer confidence. That used to be red folder news. You guys notice that? For some reason, it's medium impact news now. That's strange. And then we got high impact news Thursday and Friday. So it should be a good week of volatility. All right, so let's go and get into what I'm looking at here for this week in the US dollar. And then, of course, I'll get into the Q&A portion here at the end. Slim, hello, hello. Strat King, happy Sunday to you. All right, guys, so weekly chart, looking at this weekly fair value gap here. If you guys remember, this was the draw I gave you guys last week. Of course, not a whole lot of range to work with, but nonetheless, the algorithm taking the market into these key levels, right? So weekly fair value gap was now priced into. What I want to see going forward is how we trade inside this gap, right? So do we start to stay in the lower half, build bearish market structure? Those are things I'm going to be looking for. As of right now, I'm favoring lower prices in the US dollar, so I want the market to show its hand inside this weekly fair value gap. Working down into the daily chart, I want to go ahead and zoom out so you guys can get the higher time frame perspective here. Admittedly, I am looking for a market maker sell model, right? So I do want us to attack this original consolidation here. However, what I'll have to see is how we trade inside this daily fair value gap, because I want to see if this can become a measuring gap. If so, then we're going to have a nice price run into sell side here. So we had the market create a high. We broke down, aggressively displacing into sell side here and this sell side. Again, it's reasonable to see it retrace into that daily gap, but I want to see again how we trade there. Do we get into this imbalance, stay in the lower half, build in bearish market structure? And then if we leave these gaps open, then it's signaling that the market is extremely heavy. So I want to see this gap up here remain open as a breakaway gap. And then I want to see if this one can become the measuring gap. And then again, give us a price run into this original consolidation here. And then as far as potentially this sell side back here. So that's what I'm looking at on dollar macro perspective. Of course, the market needs to show its hand, right? Let's say we just get into this gap and just keep ripping through it. Then that gives me entirely different insight, right? So again, it's one of the things that I frequently say, that it's not a matter of being right. It's not a matter of me being able to come back at the end of the week and say, look, it did what I expected. These are just the key levels that I'm using to frame my game plan, right? So if the market gives me different feedback, then I'm going to have to take that information day by day as I'm getting it. Kevin, hello, hello, brother. All right, hourly chart. So again, you guys can see that daily gap here in red above market price. We also had all these equal highs here and here. So I do favor them continuing to take it up into that. But then, like I said, I want to see how we trade there, right? So do we get up into this gap, stay in the lower half, which would be ideal for weakness, and then see the market rotate to the downside and then clear out that sell side? Again, personally, that's what I'm favoring. But like I said, I have to let the market show me its hand here inside the daily imbalance. So with that, let's go ahead and confirm that in the bond market now. Let's go up to the weekly chart. All right, so weekly chart, we've been in a bit of a consolidation range really since the beginning of March in the bond market. So it's not been easy to call because it's not expanding. It's not really going anywhere. So as of right now, still monitoring the SMT at the highs. So we see SMT with the higher high not made in one of the bond triads, and then the other two did take out that buy side. So as of right now, that SMT is still holding. My attention goes to this wick right here, and then you'll see how this candle open, traded higher, hit the upper quadrant, slam lower. This candle open, traded higher, hit midpoint, and now working lower off that. So as long as we stay below the wick midpoint, I'm looking for lower prices. But again, as you'll see as we roll into the daily chart, we are in a consolidation, right? So whenever the market goes into a consolidation like this, generally I'll just wait for more information. I'm not trying to pick, are they going to break out to the upside or the downside? Generally, I'll just see what they do from the consolidation. Which direction do we get the most displacement in once we leave this consolidation? And that's going to give me a great deal of foresight as to what I want to see going forward. So that's the business there for bonds. Not that clear for me right now. We also do have another minor SMT that you can see here on the daily chart. So in addition to that weekly SMT, we also have a lower time frame SMT here between these two highs there respectively. So something I'm noting, as long as the SMT holds, again, I'm still favoring bearishness, but I want to see the market leave the consolidation because then we'll get into more cleaner expansion, price action like this. That's a lot easier to navigate and predict as opposed to when we're in a consolidation market. All right, moving right over to NASDAQ here, weekly chart. What you guys will notice, we had an inside week. An inside week is when, let's get the mouse on here, when the current bar does not take out the previous candle's high or low. So generally when I see that after large ranges, after small ranges, we generally get large ranges, and then obviously vice versa. After large ranges, we generally get small ranges. So I am looking for a bigger weekly candle next week, especially looking at how we're primed to expand after a small consolidation week. I really like a term ICT used it to really help me understand it visually, that whenever the market is in a tight range like that, and we just have a small range, you can use this on the daily chart and weekly chart. So whenever we have like a small range day or a small range week, it's like a spring that's compressing. And then eventually what happens with all springs that are compressed, they obviously explode and then they expand. So that's generally the way I internalize a small range week or a small range day. And that's been something that's been really helpful for me to keep that straight in my mind. So this weekly fair value gap here that we were watching last week, I wanted to see if they could stab it up into that. They ended up just keeping it in the range, like I said, and that's why I'm going to go into some insights as to how you guys can trade these range-bound markets and what it is that I do to still go in there and frame setups in difficult or slightly more difficult trading conditions. Again, not impossible, but slightly more difficult. Weekly fair value gap here is something that I see as a short-term draw. I'm still bearish. In my mind, there's nothing bullish in the stock market right now. It is reasonable to see the market retrace to a short-term premium, again, considering the huge sell-off that we've seen. But as far as I'm willing to see it go is this weekly fair value gap here. And then, of course, I'll have to take that information as I get it, right? Do we stay in the lower half? Do we hit it, break down aggressively, or do we just steamroll onto it, right? Those are all things that give me different outlooks on the market going forward. But this is the key level that I will be using to frame that. So now working into the daily chart. All right, so you guys can see, let me get this position so you guys can see it well. I've got these big ass 27-inch monitors, so sometimes for me it looks big, but when I look at it on my phone or on your guys' computer, it's all small. So I want to make sure you guys can see the information here. All right, so daily chart for NASDAQ. RJ, locked and loaded. Glad to have you, my man. And huge congratulations on your payout. No, it's not easy, but you've made it to the top 1% where the most never reach. So keep up the awesome work. Huge shout out to my man RJ putting in the work. All right, guys, daily chart here. Again, you guys can see we've been in a range. Key level I've been using has been this daily fair value gap, using it to read order flow day to day as I've been trading. But key levels that I'm watching right now, this down close candle here, and then the 50% of this down close candle. You'll notice the bodies have remained above that. So as long as we remain above that, that's signaling to me that the market is short-term bullish. And emphasis on short-term, right? I'm not saying this is the ultimate low and I'm expecting higher prices. and for the market to want to come up to these highs. In my mind here, nothing in the cards is suggesting higher prices other than for a potential short-term retracement to a premium and continue lower. So what is it that I'm saying there? As long as we remain above 50% of this down close candle, this bullish order block, above the mean threshold, as long as we remain above 50% of that, my attention goes to these equal highs here. And then as far as the volume imbalance, looking at all this price action here, if we're going to remain bearish in a sell program, I don't want to see these up close candles and this balanced price range violated. It's a balanced price range because it's already delivered lower, higher, and then we've left that range. So all this back and forth price delivery indicates to me that we don't want to see that violated. If we do see it violated to the upside, then again, that's giving me different information, and then I'll have to pivot and be flexible in my analysis at that point. As of right now, though, I'm still looking for lower prices, except for a short-term retracement. It can go as high as this volume imbalance, but like I said, all these wicks, all this back and forth price action, and up close candles, I personally would not want to see that violated if we're going to remain bearish longer term. So again, it is reasonable to trade above these buy stops here, build in a short-term premium, and then continue sinking it to the downside, which is what I'm favoring. If we don't get above these highs, and then we just, for example, let's say we open with just a crazy gap down, right? And then we just start melting through 50% of this down close candle, then the market is not just weak, but it's extremely bearish because it couldn't even get up to that inefficiency, right? So those are things that I'm weighing out in my analysis as of right now. All right, working down into the hourly chart here. So you guys will notice we've been in a range here. And what do I mean by that? Well, you take the lowest low and the highest high of the range. Then you can just see the market continuously reaching for a premium, back down into a discount, premium, discount, premium, discount, premium. And that's basically the protocols for consolidation market profile. So that's what we've been working with this week. If you're looking for huge expansions, right, like you're getting in and you're trying to swing trade, or you're trying to have hold a trade for big targets, it's going to be very frustrating for you, especially in these particular market conditions. So one of the best things that I've been able to do as a trader is, before, I used to really struggle in these market conditions, especially as a developing trader. And it's because I didn't understand what the consolidation was doing. When you understand what I just shared, which is mark out the highest high and the lowest low of the range, you'll see the market's gyrating between premium and discount. When you understand that, you're able to get in and take surgical strikes, get in, get paid, move to the sidelines. What I didn't understand before, and I'm sure many of you guys also have run into this as well, that then we just marry the vein. What do I mean by marry the vein? Well, let's say you're in this price run here, which I did trade. I did trade this live, and I took the setup for about 50 handles, about $2,000 into the buy side here. And that was the trade I took. But why when I was long, why didn't I aim for this high here and this high here? Because my understanding of market consolidation profiles. Before, I wouldn't consider that. I would see, okay, the market's going higher and there's equal highs, so the market has to go there. So I'd get long, take no partials, and expect the market to get up there because, of course, the market attacks equal highs and equal lows. Not if we're in a consolidation, though. So what I was able to learn through experience of just getting my ass handed to me, being in good trades, and then they reverse on me and take all the open profit and either stop me out at break even or at a loss. And it was because I didn't understand the profile I was trading in. And I was just hoping every day was just going to be a big run to targets because I didn't know and understand market profiles. Whereas now, after learning, journaling, doing all the things that I recommend you guys doing, which I will be making a video series on that. If I were starting to trade in 2025, what would I do? There's a 4-step process. That's a system that I've designed for those I'm coaching, those I'm bringing on as analysts in my business. And for anyone that I'm recommending, there's a simple 4-step system that I give to profitable trading. And I'm looking forward to sharing that with you guys. But it was me doing that that allowed me to then understand how I want to trade in different conditions, right? So because I journal, because I review, I was able to see, okay, where are these problematic areas in the market and how are they affecting me? And then I would notice it would always be these range-bound profiles, but I wasn't able to anticipate them and see them. And then what I had to do was eventually build in protocols for when we are in these conditions. I want to get in, get paid, take low-hanging fruit, and move to the sidelines. Also, another thing that I've learned is I want to keep my trading activity very low, right? You guys will notice, for those of you guys that were in the live trading room with me, we live traded 3 days this week. I was green 2 of the 3 days, one of which was a red day. And I took very low risk trades and low frequency of trading. And it's because I understand my model and where it performs best. In consolidation markets, I can still find setups like I'm about to show you guys here using 15-minute liquidity pools. However, I don't want to have a lot of activity in these market conditions for my trading style. When my trading performs best is, let me show you by contrast, when the higher time frame is expanding directionally to targets. It makes it extremely easy for me to just wait what I'm looking for. If I'm bearish, wait for a short-term premium, and then I ride down the shorts, and it's easy to trade in line with that weekly and that daily candlestick. However, what I've learned from experience is that these market conditions here are particularly more problematic for my trading style. Of course, I've improved and I've adapted from when I first started, so now I'm still able to go in here, trade it, take my pound of flesh, get what I'm looking for, but I do have to trade a very particular way, which I'll show you guys as soon as I get done with this here. So I just want to share some insight with you guys on the consolidation. So where are we at now? What am I looking at going into the new week? We see the market drop down here into this sell side here. And then we saw a strong rejection of that to the upside. So as long as you remain below on the 4-hour chart, or sorry, above, as long as you remain above these 4 consecutive down close candles, my attention goes to these equal highs here. I like how we dropped down below mean threshold of 50% of that order block. We took out sell side here, and then we got a strong rejection to the upside. So that tells me the next draw, or the buy side here, is in the crosshairs, and then we can go as far as that volume imbalance, which is that inefficiency on that daily chart. If and when we get there, then again, I'll be looking for clues that the market wants to rotate lower. I would not want to see this high here taken out because that is a key high in my analysis as an intermediate term high. So I would not want to see this high here taken out. If we do start to show speed through those levels and like blow through this high, for example, then I'll have to take that feedback as I get it, and then use that insight to either pivot or be neutral and wait for more information. Don't want to keep my cards too close to my vest. So what I'm looking at is for the market to go higher and then rotate to the downside. So what I'd like to see is for the market to trade higher, right? I want to see them push it into a premium. This will allow smart money to short the buy stops here as counterparty. And then from there, I'd want to see the market rotate to the downside and continue the heaviness on the daily and the weekly chart. Again, as I covered, if the market cannot even get up into the buy side or this volume imbalance here, then that's signaling that the market is extremely weak, and then we'll likely see big down close candles on the daily chart. So other than that, guys, I want to go into some insights as to how you guys can trade these range bound markets, and some of the things that I do to still frame setups in more difficult market conditions. And then I'll go ahead and go into Q&A here. So looking at the 15-minute chart here, you guys can see we've been in a range, right? So if you're trying to look for huge expansion moves or try to swing trade this, you're going to have a very difficult time because you're not aligning your trading with the actual market profile that we're in. So one of the things that I do to still find consistent setups day to day, week to week, even in a consolidation, is I'm using my 15-minute chart. So what you want to do is go into your 15-minute chart at 9:30. So we'll use Thursday, for example. This is an example that I traded live. So looking at 9:30 here, you then want to frame your 15-minute liquidity pools, right? So that'll be at 9:30, we have sell side here. Let's make that red. And sell side here, right? So we have sell side here, and then we have the buy side above here. So initially going into this day here at 9:30, I was bearish, right? I was looking for lower prices into these equal lows. But then the market did what at 9:30? We just shot higher, right? Just shot higher, ripped through this fair value gap here, this imbalance. There's an hourly inversion fair value gap, and then that daily fair value gap that I was telling you guys that I was using to read order flow. So let me go ahead and put that on there for you guys. And this will be a short review for those of you guys that watched all this live. So that gray rectangle that you guys are seeing, we're going to transpose that down into the 1-minute chart, and you guys will see how these levels are helpful for reading order flow real time. So let's drop down into the 5-minute. Let's get market replay on here so we don't have to worry about all that other price action. So looking at 9:30 here, right? I was initially looking for sell side, right? So my initial bias coming into the day was completely wrong. I could have been any more wrong on what the AM session was going to do, right? But like I've told you guys before, trading is not about right or wrong. It's about making money. So going into 9:30, I was initially looking for sell side, but then the market did what? It just shot higher. I was watching this daily fair value gap, again, doing top-down analysis. There's a YouTube video on that as to how I do top-down analysis. And then what I'm using is top-down, I'm framing my key levels that I'm going to be using in this section. So if I'm bearish and I want to see the market trade into these 15-minute lows here, because that's all I'm looking for, right? I'm not looking for 800-point expansion moves on the daily chart. I'm just looking for surgical strikes into 15-minute liquidity pools. And if they're time-based, it's even better, meaning it forms during Asia, London, pre-market, New York, lunch, previous day's PM session, highs and lows. I'm looking for time-based liquidity pools. So looking at this here, what I wanted to see was at 9:30, the market trade up into that gap and build in a premium. And then I wanted to see the market sell off and rotate to the downside and attack sell side. But we ended up seeing the market do what? It just ripped through that daily gap, and then we closed above it here. You notice that? So that's signaling to me, understanding just basic gap theory, that the market is bullish because we traded above it, closed above it, and then now it's using it as support. And then all I needed to frame was from this low here, a price run into these highs. And that range offered about 130 handles. I just took out 50 handles out of it. That's fine. That's all I'm looking for. But one of the things I do want to cover is why didn't I look for this high here and this high here? Because I'm understanding with the market profile that we're in, I don't want to demand the extremes of the range. Because if you look at the range that we're trading in on a higher time frame, now let me take all these levels off here. The deeper in a premium that we go in the consolidation, the more the probabilities drop off for it to continue, right? So as I'm trading long in here into these buy stops, which is London highs, right? So the previous session's highs, as the market trades up into a deeper premium, the further into a premium that we go, the more the probabilities drop off for it to continue. So I want to get in, scale off profits, get out, and then you can see the market rotated to the discount end of the range that we're trading in. So that's just one small example that I did trade live on Thursday. You can do that on the other days as well, right? Look at your 9:30 opening price, study your 15-minute liquidity pools, then study those price runs. And if you do that, you're not going to overstay your welcome, right? You're not going to get chopped up. You're going to get in, get paid, and keep it moving. And that's essentially what it is that I'm looking to do in these market profiles. So I did cover that before, but wanted to share more insight with you guys because from what I was seeing, it was a difficult week for most. And it wasn't even easy for myself, right? I started the week on Monday in slight drawdown, pulled myself out of that drawdown with good quality trades, not in a rush to get out of the drawdown, right? Taking quality setups, not being in a rush, managing risk, and letting the equity roll back into the account, relaxed, nice and easy, not rushing it, right? Huge key when you're getting out of drawdown. It's not something you want to rush. You want to take it nice and easy, right? So there's my insight here for this session. That's what I'm looking at. Wanted to also cover what it is that I'm looking at in consolidation profiles and how I attack that particular market profile. So any questions from you guys, any markets you guys want me to take a look at here before we get going to enjoy the rest of our weekend? Ali, why wasn't the volume imbalance included in that fair value gap though? Let me see. Are you referring to the daily chart, like this fair value gap here? Yeah, probably. The reason why I'm not including this volume imbalance here and here is because then that just makes the range too large here. So now if I have this and this, now this just becomes a massive range. It's still helpful, right? It's still, it's not incorrect to label it like this, but personally for the intraday trading, I just want to be able to see this range here. And that's what's been helpful for me. Neither's wrong, neither's right. I just want to use that inefficiency there for while I'm intraday trading. But you can see this range here, measuring it to the extreme volume imbalance here to here. It's still helpful and effective for you to use it in that way. And you'll notice the bodies there perfectly stopping at the midpoint. That's nice. Yeah, great question, Ali. In a normal market environment, how is dollar and NASDAQ correlated? Negative? Yeah, great question. So in a traditional market environment, dollar higher sends NASDAQ lower, right? Because it's the risk on, risk off relationship. Risk on means investors are willing to take on risk. So the capital is pouring into risk assets like foreign currency and the stock market. When there's a risk off environment, it means investors aren't willing to take on a lot of risk. So capital's flowing into safer assets like the US dollar and flowing out of indices and foreign currency. So that's the difference between risk on, risk off. So dollar higher, risk assets lower, dollar lower, risk assets higher in a traditional market environment. What we've been seeing here this year has been anything but traditional. So it's not something I've been weighing really heavily on. And the good thing is I don't have to worry about fundamentals. I don't have to worry about tariffs. I don't have to worry about all this other things that get a lot of people misleaded and excited. I'm just looking at open, high, low, and close, time and price. Where's the liquidity? Where's the inefficiency? And I've got a blank check that I'm able to write to myself every single month with that information. So luckily, it is a helpful tool to have in your back pocket. But if it's not something that is helpful at the time, which it really hasn't been for me, for example, we have been seeing dollar selling off along with NASDAQ, right? So where's the fundamentals in that? So one of the things that I do to kind of cut through the noise and get to what matters is, again, what I share with you guys here, right? When I get to the session, where's the liquidity? Where's the inefficiency? What time of day is it? How are we behaving at certain times of the day, right? Macro windows, opening range, and those are all things that help me frame setups day to day and not even really need to worry about all that other stuff that's going on. Can you take a look at the YM? Yeah, for sure. Let's take a look at the Dow. All right, so looking at the Dow, same thing as the S&P and NASDAQ. We do have that volume imbalance there in that weekly fair value gap. So it's reasonable to see it trade up into that. And then I want to see how we trade there, rotate to the downside. Like I said, I don't think the bleeding is over for the stock market. I just think it's reasonable for them to build in a short-term premium and then sink it to the downside. Again, I'm okay with being wrong, right? If the market gives me different insight, then again, I'll take that as I'm getting it. But right now, I'm seeing lower prices on index futures. Looking at this last down close candle here. Trade into it once, twice. We're staying above that. So again, I do favor that weekly fair value gap as a draw. And then how we trade there will give us that insight going forward, which again, I am bearish, right? So I'm still looking for us longer term to keep selling off on the stock market. So as long as you remain below that weekly fair value gap, my daily bias remains bearish. But like I said, it is reasonable to see it retrace short term. And then looking at the hourly chart here. Yeah, same thing as the other averages. Drop down, sell side taken, buy side here, and then how we trade above that buy side will be influential going forward. Yeah, great question, Strat King. Alessandro, as we roll over to NQM, we face a chart with a lot of gaps, which is normal for rollover, but this gap does not happen on the continuous contract. Can I use levels from NQ1 to trade? And yeah, great question, Alessandro. So what I do personally is I use just the current contract. If I'm doing like macro analysis, like what does that mean? Like if I'm looking at like maybe a weekly chart or a monthly chart, right, then I will use the continuous contract to have all that information. However, personally, for my trading intraday and with my trading style, I'm always using the continuous contract for the most part, or not the continuous, sorry, the current month contract. Let me be very clear. So for macro perspective, I use the continuous. For my day-to-day trading, I'm always using the current month contract. Reason for that is exactly as you mentioned, there's inefficiencies inside that range that I want to be able to see. I'm of the opinion that the algorithm does refer to these inefficiencies, so I like to be able to use them and measure those gaps in the low volume price action, right? Because this was all lower volume price action before it became the current month contract, and the algorithm will still refer to these specific reference points even in the low volume market conditions. So I do personally like to use the current contract even for the higher time frame. Is there anything wrong with using like your key levels on the continuous? I don't think so, right? It's just a matter of what works for you. I personally use the current month contract and the key levels that are on that. Unless, again, I'm doing macro, higher time frame, monthly, weekly analysis. Ali, got it. Thank you. Awesome. Zeke, remember to thank Dylan today. Appreciate that. Yeah, and the way you guys can thank me is just hit that thumbs up on your way out. If you guys got some value, if I helped you guys out here today, please do hit that thumbs up on your way out. Greatly appreciate it. Zen, correlation is now more euro up, NQ down. Yeah, it seems like it, right? It seems like it. Absolutely. And again, there's just a lot of things going on in the world, right? If you keep in mind, trade wars, tariffs, how that affects respective currencies, economies, there's just a lot of things going on right now. And I don't pretend like I'm smart enough to know all that, right? So one of the things that I do, like I said, is it's really helpful for me. It gives me a lot of peace of mind because I'm not here over the weekend sweating about, oh, what's Trump saying? What are these countries saying? What's going on here or there? It's just way too much. I just cut through the noise, focus on what the charts are telling me, and it gives me mental peace, allows me to relax because I can trust the open, high, low, and close in the candlesticks, and I don't need to worry about all the other details. Yeah, but that is the correlation I've been seeing, right? Dollars moving in sync with NASDAQ, which naturally euro would move opposite to NASDAQ in that market condition. So very interesting times that we're in. And again, that's something we've been covering since last year. Things are getting really interesting. And of course, we're seeing the effects of that right now. Alessandro, thanks a lot. Yeah, my pleasure, man. I charted some defense and arms companies. All I can say is something is going to happen globally. August to October. Stay safe. Yeah, let's check out some of the defense companies. Lockheed Martin. Yeah, looks like they're pricing them into a nice discount. Yeah, very interesting. Lockheed Martin. What's the other? Raytheon. Man, bringing back some old memories from when I'd be trading the stock market. Where's Raytheon? Am I looking at the right one? All right. Yeah, I don't know. All I know is Lockheed Martin for sure. And then there's Northrop Grumman. Let me see. Yeah, so those are the two main defense contractors. I used to trade Lockheed and Northrop Grumman. Yeah, very interesting. Very interesting to see what unfolds. Yeah, things are getting interesting though, to say the least. But August, October, that's an interesting timing. Yeah, we'll see. We'll see what happens. All right, guys. Any further questions for me? Let me take a look at crude oil here. Yeah, crude oil still got that sell side there. Gold still ripping higher, right? So keeping you guys on the right side of gold as well, as I covered last week. Again, when markets are at all-time highs, you want to keep focusing on buy models and looking for higher prices. And again, that's what we're seeing on gold. Gold absolutely ripping. Then have you considered the quadruple witching or just business as usual? I believe that was this Friday, right? The end of the expiry, the futures contracts. I believe that was this past Friday. Am I right? Yeah. Okay. Yeah, it is something I do have in the back of my mind. I'm still. Let's go to the hourly chart here. It's something I am considering because I have noticed that price action does get slightly more manipulated during those times. One of the things that actually kept me completely hands off on Friday, and not to say again, there's not price runs in here, right? If you do what I shared with you guys on your 15-minute charts and you frame liquidity on the 15-minute, there's price runs every single day you can trade, right? So it's not to say that there aren't price runs. However, one of the things that kept me hands off on Friday was the fact that we've been in a consolidation. We had no high impact news, and the factors that you mentioned, right? We have rollover this week, and then the quadruple witching, as you said. And if you look at the 1-minute chart, really not easy price action to navigate, right? Is it tradable? Sure, right? Someone with more experience can get in here, dice it up. But for me, this is a day I'm happy to avoid, right? I'm not an everyday trader. One of the things that we say in the community a lot, one of the things that my man Tommy is one of his favorite sayings is, we're day traders, but we're not everyday traders, right? And this is the day where I'm happy to not be an everyday trader, right? Like I said, other price runs, absolutely. Can someone trade it? No doubt. Do I want to trade it? Hell no, right? Especially when you're putting on thousands of dollars of risk behind your transactions. The game changes a lot for you, right? And what do I mean by that to give you guys some perspective? Well, when you start risking thousands of dollars per trades, you realize, well, shit, I don't need to take a lot of trades to make a shitload of money in trading. So then your focus switches from an eager trader like I was when I first started and I was trading a little bit of money. It's just, oh, well, let me get trades. I want to trade every day. Oh, look, there's a fair value gap. Time to trade it. And I was just being impulsive, right? Because I was excited. But then one of the transitions you have when you get no more of a professional mindset and you're putting real risk in the market is quality over quantity. So you start focusing on the risk as opposed to the reward, right? And then as newer traders, we're just thinking, what can I make? How much can I make on this fair value gap, on this one here? And then we're looking at all types of things, but we're not really thinking about the risk, right? And then it's eventually, once you make that transition over, and now there's a lot more weight behind the transactions that you're taking on, you become a lot more mindful of market conditions, when you want to trade, when you don't want to trade. And this is a perfect example of a day I'm very happy that my protocols and my trading plan keeps me out of. Latest trends, that's correct. Yes, sir. Awesome, guys. Any further questions for me here before we get going? QnA bonds. Then I made a lot during London, lost some in the opening range, and got back to what I made during lunch. Should have quit after a first win. Hey, that's good. That's good intel. That's good feedback then, right? Those are things I had to learn as well, right? You guys will see, for those of you guys that work with me, usually once I'm paid for the day, I'm done. Especially in these market conditions that we've been seeing, I'm not really trying to push it a whole lot. And those are things I had to learn as well, right? I have great trades, give it all back with, dumb decisions, just wanting to overtrade. And then eventually I had to put in my trading plan, right? How to keep the gains that I'm making. And then over time, that's all part of the process, my man. So journal it, learn from it, and use that insight to keep moving forward. Like and subscribe if you haven't already. Absolutely, please do. I'm going to get much more active on the YouTube going forward. But like I said, right now, my hands are full with everything that I'm doing in my personal trading with my team. And of course, the world-class mentorship that I'm working on that, again, is a huge responsibility for me to make it at the standard that I want it. So once I get through with that, and I've been saying this for a while, but we will get much more active in providing a lot of value here on the YouTube going forward. And I'm very much so looking forward to doing that. Alrighty, guys. Don't see any more questions. So with that in mind, then, stay safe. Have a phenomenal rest of your Sunday. And about a live stream this week, we'll have to see what day I'll be able to work in my schedule, but hopefully going to do some tape reading with you guys here this week. So with that in mind, guys, take care. Stay safe. Have a awesome rest of your Sunday. Stay safe this week. A lot of high impact news. So I'm expecting fairly good market conditions, especially with what I covered, how we had a small range week the previous week. So I'm expecting some more fireworks here for this coming week. So with that in mind, guys, stay safe, take care, and I'll see you guys on the next one. Bye, everyone.